Hello traders, let's talk today about earnings, how to make easy money trading options during earnings. Obviously out there are so many stories that you hear of people making thousands of dollars trading earnings, right? But today in this video, I'm going to show you what I believe is the best approach, not because I've heard that, but because that's what we have been able to do, but consistently. So earning seasons, there are four of them, as you know. The first one from January 15 through the end of February, second one from April 15, end of May, third one from July 15, end of August, and the fourth quarter, which we are currently on, it started a couple of days ago. October 15, October 13 was the kickoff this year, all the way to the end of November. What happened in those time frame is that the company report the quarterly performance. So did they do well? Do they do not well? So some traders out there believe, hey, I can, for instance, buy option contracts without, and usually it's always calls. Don't ask me how do traders believe that, hey, the only way that you can make money in the stock market is through calls. So I can I have another story coming out for you. So method number one is buying options, let's say 2 weeks out. But how do you know the direction? That's important. So are you just going to consistently buy calls? I can tell you that's not going to give you consistency. You can get lucky here and there. Oh yeah, I've met traders on, let's say, on Apple, on Amazon, because for whatever reason, so going to some website to say, oh, the sales are doing this, or Netflix, the number of subscribers or what. None of these things is consistent. Though the closest thing to, if you want to increase your probability using that method of buying, let's say 2 or 3 weeks out, is to be able to say, okay, let me buy both directions, a put and a call, to get it stronger. In which case, yeah, you can ride any momentum going to the earnings. But my friend, it's quite expensive. I don't know if you have looked at Netflix option leading into earnings. Every single day that passes by, there is this parameter called implied volatility. If you don't know about it, that is just going up and up and up. So yeah, you get into that trade, but the it's quite expensive, so, and not consistent. The second method that people do use is, oh, just a few days before, let's buy contract, and typically again calls based on what, I don't know, the hairdresser told them something, the doctor told them something, I don't know. That's, hey, Apple is going to beat, yeah, a company can beat earnings and its stock actually go down. We have seen that many times, because if it was that early, nowadays company can beat earnings. Beating earnings nowadays in the US stock market is no big deal. Any company can do that. Creative accounting, in terms of repositioning shares, it's something that they all do. So beating earnings is not an indication. To be honest with you, I can give you a hint that the guidance, it's more important than beating. I've seen company through my many years trading, I've seen company miss on their earnings, but on that conference call, if they're able to provide a strong guidance, analysts typically will go along with that instead of what's their past performance. The market's forward looking. So the idea that consists of saying, hey, let me buy calls or options, if for that matter, just before earnings, a few days before earning, and carry through earning, it's a pure gamble. I can tell you, if you have done that before, you have lost money. All right. We all go beginner at some points where we just say, oh, the stock market's so easy. Now, if you want to do the same thing as we did before, say, hey, instead of just buying one direction, let me buy a strangle, meaning I'm going to buy puts and calls. Let me stop you for a minute. Have you looked at the implied volatility of stock, all of those big stocks like Apple, Netflix, Microsoft, Amazon, going into earnings? Market makers will make sure that, hey, no matter the move that happened, well, your potential gain in one direction will not offset the loss in the other direction, hence making it very difficult to achieve consistency. What I'm about to offer you, what if I told you that there is a way actually to make easy money trading earnings, options after earnings, without actually risking that much, and after the results are known? So for me, I spent years studying this, and I have the research for you where we trade consistently after earnings. And we can trade, let's see, double BA today, Walgreens, it was yesterday. I think you can invest on that for a mere $2. We have enter trade post earning on option. Oh yeah, that contract, by the way, on WBA went from 2 cents to $2. Yeah, that's you're looking. That's the background. That what you're looking in the background. So that's a trade that I can show you if you come inside of our Discord. We have enter trade for as low as $1 consistency. So we have posted those video here on this very channel. I think I'm going to post that video on there. So this research that we have done is spanned from 2017, where we have looked at quarterly earnings of company, not all of them, because the market optionable stocks that's are over $20, which that we trade, I think, on Finwiz, if you do my filtering criteria and with decent volume such that the spread is not too big, you have like 900 stock. But for me, I have 10% of those stock, about 100 stock or so that we have studied, and we have been able to generate consistent results post earnings. Because which that happened, let me give you a little insight on here. Well, analysts, they usually will make upgrade, downgrade after the earning based on the results. Yes, that's what happened. And new investor come in because hey, either the results are good. So the days after the earnings are actually the safest day, because what happened immediately following the earnings, the implied volatility drop, meaning the implied volatility, which is one component into the premium, the cost of the option, dropped tremendously. Thus, for us, we are able to buy at very cheap price, but we have a unique approach into it, because you could ask the same question. Hey, how do you know the direction that's gonna? We do not. Yeah, but based on an indication of what happened, how the stock reacts, after its earning, we are able to set up a trade that has been consistently giving us money. I'm going to be putting some example here and there as I'm speaking on here, recent example that repeats. I show you, for instance, trade on JD, August 2020, August 2021, the same result. I kid you not, the same result. And yeah, JD on one day, on that day in past August, I think we have shown videos on that. It was able to put 5 cents, turn it on the same day into $5. Imagine. And WBA just did from 2 cents to $2. That's the cost per contract. I believe the other example, early example this week were what? JP Morgan traded nicely. So who can I think about? On the second day, I think Wells Fargo, after the bank reported, generated consistent gain as well. Oh, how about my favorite today being Friday, I believe Alcoa, the ticker is AA. So I'm going to post all of those trades on here. And my friend, you're in for a show. The next 5 people who are going to decide to go to successfultrading.com and book an appointment with me, a free consultation with me, they are going to have access to this multi-year research report to use on their own. So I'm looking forward to trading with you very next. Until then, have a great day, have a great evening, wherever you're watching from. Bye-bye.